Did it go through? It went through? We're live. All right. What's up, everybody? It's me and the big white machine, Rocco. Looking at charts today. Interesting action, a very resilient market. Some stuff working out, some stuff not as usual. Nice day for the markets though. S&P up nearly a full percent, inching on towards new, almost all-time highs. Volatility came in about 5%. Pretty soft day. In volume, really quite low. Last I checked at the close, it was less than 30 million shares of SPY, which is July 4 holiday, November Thanksgiving week type holiday type volume session. So without further ado, let's take a look at the doc. Let's see what it came up with today. A little bit funky, but so here's why it came up with this, interestingly enough. So I don't know if you remember this too, almost prophetically, I wrote on my sheet, if y'all remember, on Friday, I had been drinking at a Rosh Hashanah celebration, but I wrote, go long India Monday. Did not do that, obviously, because human life, mistake, person, vulnerable. India today had a big jump. We'll take a look at it. India ran up today, up 1.8%, a huge move for a low volatility index like that too. So a big move, like I said, when I write it down, in terms of studying the cycles and the harmonics, if you will, of the markets. Sometimes the date is more important than the price entry. So we'll see. I'm still looking to get in. I did not get in yet, but India and technology, big days today. Tech, if you saw the Nasdaq, which we'll take a look at, the Q's up 1.5%. I rounded up here to 2% as both were pretty near there. In China, we were talking about when is it going to mean revert? You could probably chase it, but don't be surprised one little iota. Even he wasn't surprised an iota if and when it corrects, and you got your 9% pullback today. So that's the game. Thanks for playing. We'll take a look at the chart. If it's still investable, I think you know what I'm going to say. GTFO for a little bit, but we'll see. It's probably on sale. We'll take a look. And obviously that dragged down all of the emerging markets, EEM down about 2.5%, as well as energy. So I had a nice day finally with my energy short. Energy, a horrendous day, down 2.5%. We're staying 6 months for energy, as even with horrible Hurricane Milton, they're making up a category 6 for this. So be careful for everyone down there in the South. Thoughts on me and my family are praying for you guys. Hopefully you get out if you have to evacuate and all that, because it is scary stuff, especially if you have kids. So weird in that there's, I think that I read somewhere like almost half or something like that of gas stations in Florida are out of gasoline, and oil was down hard today. Weird to have that price action when, supply and demand, but obviously there's a lot of things at play down there right now. All right, so let's take a look at the chart first. So this is the screen for here. Let's go into the charts, which is what we do here. Yeah, what we do here. Tired. It's Tuesday, right? And it's only Tuesday. All right. So where is my dashboard? There it is. All right. So let's take a look at day price action first. Like I said, so at the end of the day, SPY closed with 35 million shares. That's very light. So I'm not going to pound on that again. But in terms of the price action day, traded very well. Here is the open at the 9:30 a.m. bar here. We held VWAP all day, had a little bit of give back towards the 1:30 hour, usually when there's kind of a reversal or a stronger trend, usually a reversal in the market around the European close. There will be some kind of a trend change. Here it just firmed up at the lows. That VWAP, very important here. You see as it was served as support at 1 and 1:30, and we zoomed higher. Actually, a nice flow of buying at 3:30 p.m. And we closed, above VWAP for nearly 1% day higher. So larger perspective on SPY. So I've been talking about, SPY being in a distribution phase up until about, I have it here on my sheet, right around October 15th. So it's about another week. It seems very strong and everything else, but I'm not going to chase it right here. I'm going to pick my spots. I do have a list of buys this week, and maybe we'll get through them. They include banks, gold miners, some leveraged S&P plays. More like today's kind of action is what I'm expecting. And India I have on my sheet. So we'll look at that right after this. So get ready for the buys, but I'm not going to think it's off to the races. I don't think of the next week. More likely, I think, is over the next by 7 days or so from now, probably around 565. So small pullback of around $8. So about 1.5%, giving back what we had today. And then this will set up for a rally for the next 2 to 3 weeks towards 580, which will be new all-time high. So I just don't think we came off a bit yet. If you see here, we're still way too strong. and we don't have confirmation with the RSI. This is trending lower from where we were in price here, the close of the all-time high, the 26. It just doesn't look ripe to go through. I was honestly almost surprised by the price action today, but super low volume, anything can happen. All that being said, I would still expect about a week or so of a little bit of weakness in the market. I just don't think it takes off to the upside. A base around 565, like I said, to set up for that rally towards 580. All right, so that's where we're on SPY. Let me pull it up here. Okay, so the first thing we're going to look at, big mover today, India. Wrote on my sheet Friday night, like I said this looked prime to go. Hopefully we didn't miss it. Hopefully I didn't miss it. Very rare you get chances like this. Like I said, that was an ugly day for it on the 7th. Yesterday, that was a low close, lowest it's been since August. So, and for a strong trend like this, sometimes that's all you get. So we'll see. I think you're a superstar if you get an entry in this around 56.65. That would be absolutely extraordinary. Where my cursor is right around here towards the lower blue shade, which is the Bollinger Band. And I think this will mean revert pretty quickly. Today was pretty impressive. I think this will mean revert pretty quickly in the next week or so towards 58. I want to get on board before that happens to set up for an ultimate rally of 2 to 3 weeks towards 59. This is a slower mover. Look at the scale here on the sides, 60, 54, and it hasn't even been below 54 since June. So, and it's been in that range, 54 to 59, right? So, in 4 months. So not a massive mover in terms of volatility, but a great mover. I like the international trend. If you don't have any allocation, I think it's wise. I'm glad I invested in allocated to Japan and EWJ options, which have done well. Some of the options have not done well from the other spreads. So it's good to diversify as always. And this chart looks wonderful with all-time highs for India just a very short time ago, September 26th. Alrighty then, for the great Ace Ventura. Okay, another chart here. So IGV, this ran up. This is very similar to Nasdaq. I'll look at Nasdaq after. But IGV is strictly the tech software iShares. So this used to be a chart I looked at a lot. It used to be one of the most important charts to me in the market, almost up there with SMH because it's pretty similar in a way, but different holdings. So this is much more Salesforce, Oracle, Microsoft. So different importance in this market, but still very important. I think I do look at it very, very much. And this hit new all-time highs today. So as you can see on that here, and that candle is robust. I was surprised how strong this is. New all-time high up 2%. You saw NVIDIA go huge today. NVIDIA had a big day, and this doesn't really make this up. The big one here is Salesforce, Oracle, and Microsoft, which makes up about 25% of the fund. So yeah, save my NVIDIA comment for later. That was the Q's conversation. Anyway, here for a setup. Whoops, screen just bopped on my end. Sorry, one sec. So yeah, I still think this has a little bit more to go. This obviously has beta and a correlation to the general market overall. A very similar spot. That's what I'm saying. I'm surprised by the strength here to new all-time highs. Sometimes this can drag the market up, but again, this is Oracle, Salesforce. Yeah, I still think give this a little bit of time. Strong candle. I still think this possibly travels towards 88 over the next week. I don't want to chase it just yet. Very curious to see what it does tomorrow. Yeah, I wouldn't be shocked though if it gets back $2.50 or about 2.5% over the next week or so. But nice rally today. Yeah, I'm not outright short these things. In fact, I'm long, but I'm just talking about the timing of it all. All right, and then Qs, a big pop today for the Qs. It closed up with a final up 1.5% here. So as you can see here, when you get that slither, like we just looked at IGV, which is heavy Oracle, Salesforce, and such, it hit new all-time highs. As you can see, the Qs all-time high was 710. So we were still having, hot dogs and stuff from July 4. I guess if you're having week-old hot dogs, it'd be pretty kind of nasty. But so that's when the Nasdaq hit its all-time high, and now we've been range-bound, essentially stuck under 500 and 425 with a rising 200-day moving average. Still a great chart. So now what? Obviously, it's going to be emblematic of the broader market. Surprised by the action today, but would not be shocked. And the level for the Qs is I'm going to refer to the 21-day exponential moving average is what I've been using for a lot of the other levels. I just don't think it's totally wackadoo to fully see this go up towards 479 over the next week or so. So that'd be a $10 reduction or about a 2% decline. Might feel like it hurts and they're taking the semis out back, but semis have done well over the past week. I wouldn't be that surprised at all. In fact, I expect it. All right. The losers today, all right, we got to look at it. It's still had a massive month, up 30% or so from the past 1 month. We're, of course, talking about China. We're looking at these candles. So let's look at this together, because this is speaking of wackadoo. This chart is absolutely just crazy, historic, and everything else. So China really not investable up until about mid-April, end of April here, and then really just putting together a base. Literally, you can see this black line here, the 200 moving average, getting these inputs in. You need almost 10 months worth or so of closes to make this essentially flat, and it found a base here. Essentially, I'm doing it visually with the cursor as well as in a calculator fashion, right around $26. Okay, they announced the stimulus last week, and massive rally way off of 26. It got all the way to 37. Now what you have to do is we're going to go back to those zoomed out time frames that we were talking about and how long it had to hold. Okay, so now we're back at a 3-year time frame chart view here, and each bar represents a week. I need to see it hold this 32.5 for a certain period. Ideally, probably I would keep it to about another month or so, and it looks like it's headed all the way back down. So that would not be exactly confidence inducing. Again, this is a longer time frame if you're looking at really investing and allocating to that and such. On a 1-year time frame, of course, it's at 52-week highs. There is momentum. This thing is finally not overbought for the first time since September 23rd. So, I mean, this trees don't grow to the sky. I think I'd be talking about before in the video. I said this has to first stop mean revert to about 31.5, 32. Again, just put figures on this. This went from 37.5 yesterday to about 33. By the way, what happened was, I believe the government, so there was talk basically saying that they're going to need more. So all the stimulus that it was given, cutting back interest rates, you could put down 50% on a house, new rules, all that, stipend if you could declare poverty or whatever. I'm not sure all the specifics, but apparently today the word was they need more to sustain their economy. So we'll see. This is a very interesting candle of where we are here. So again, this is on a 1 week. It closed down 10%. It was up higher towards $34. At one point, we closed down 9%. So not a great looking candle. All that being said, over the next 2 weeks, I'm not trading this one personally. Strangle is going to be very expensive. If you want to go directional and get this on sale, you're still trading way above all these averages, right? So basically all investors thought this was worth $26, this country, as of September 23rd. And let's see if the stimulus is an absolute game changer to the tune of $25 to $33. That's $8. We'll see if it's that much of a marker of their economy that it charges a 32% premium, right, over what we said was consensus for the past year. But there was a change. All that being said, I think this is going to travel towards about $32. And then I want to see what happens. But $31 to $32 first stop. Very curious if it gets near this level of 26, but this is going to need some time to unravel. So we'll see. We're going to be curious how the futures and everything open tonight. Okay, EEM, obviously collateral damage. So FXI was down a massive 9%. Let's see what it means for the broader EEM. Take a look at that chart. EEM. Hold on here. My computer wants to act all wackadoo. So yeah, this is super just overdone too. This is a 1-year time frame. This was a new 52-week high on yesterday. Obviously, I want to say nosebleed territory, but this is not as bad as the prior, as China outright. So this is already mean reverted to its upper Bollinger Band. I have on a different time view here, not to get the screens confused, but around 4610, I have another upper shade of a Bollinger Band here on a different time frame, a tighter time frame. So it's already done the work from 47.5 towards a 46 close. I still expect in the next 2 weeks this could descend as low as 45. So not a ton more, but probably another 2.5% or so. Not a great looking candle, but not horrendous either. A doji, but it's still closed down 2.5%. We'll see. I wouldn't be totally shocked at all. Kind of expect this to go towards around 45 in the next 2 weeks. It'd be interesting to see if, like I said, the market SPY experiences a distribution phase over the next week. If you got that opposite of animal spirits, if you will, if you have that fear overtaking greed, and it brings this EEM trade out with it. We'll see, because oil's not making any friends either. Is that our next chart? Let me see. It is XLE. So XLE, worst. Nice segue. Rocco, give me a pat on the back. His arms are too short, he said. He actually just farted. It's terrible. XLE. So worst day in 6 months. So XLE, I'm short SLB. Chart looks terrible. Of course, it had a huge spike the other day here on the October 7th, 4th into the 7th, when it had missiles going off, Iran, the whole Israel missiles. So overbought, overdone here. First stop, it was 92 I had. This is an ugly candle, and when this thing falls, it falls pretty hard. We said it's not really making a believer of me. With even though the 200-day moving average is rising, this doesn't look like a place to be. You're seeing, I think you're seeing lower prices at the pump as well, which is kind of rare, especially with a Category 6 hurricane, which is new. So yeah, I think this has a weak time. I'm glad I'm in my SLB puts. I don't think this does great over the next 2 weeks, and I think this is going to set not totally crap out, but I do see this getting to about $89 over the next 2 weeks, and that would be a clip right below where my cursor is here of the 200-day moving average. Hopefully you guys see this all the time when I do that. I don't really do the drawings and stuff. I do it on my own, but I usually draw and hover the cursors because it's pretty much the same. But let me know if you guys hate that. Put a ticker in as well if you want to put something in, because there have been a lot of movers. Okay, speaking of which, top 3 gainers of the past 5 days, no repeats in charts. Still one of the, I know I always say this, but one of the absolute most important charts in the market. Semiconductors having a rip-roaring past 5 days, up 5.5 to 6%. Today it's done very well, but look what we have here. The all-time high is way back here on 7-Eleven when you could have got your free, what is it called, Slurpee. Okay, so I was going to make a brown joke, but let's be respectful. So I am. So here's the rise 200-day moving average, still very strong, pretty heavy bar going back there. Just what I'm saying about that is price denial there. It looks like it was not ready in July. It doesn't look like we're ready for it here either. Let me look at the other chart here for a short-term projection. So SMH, again, obviously going to be very similar allocation and constituency of the general market. Want to pick my spots next week. Don't think of the area is going to give me warm fuzzies. Think this heads down to about 241 in the next week or so, which would be an $11 reduction or about a 3-4% decline. So not great. We'll see what happens. Don't know what the catalyst potentially is around there. I know we're getting Fed minutes. JP Morgan kicks off the earnings season. So who the hell knows? But just still don't see amazing stuff for the markets. And obviously semis is very heavy involvement in that. After that, though, when it does base around 241, I do think you want to purchase. And the next target would be around 255. I just don't think the juice is in this trade as much anymore in the semis. I think it's real estate. I think it's other areas. Bitcoin still outright. Home builders, those trades are on fire. The miners, gold is overtaking. So you always got to be aware as a trader of the rotations that happen under the hood. This is a good trade. Still rising 200-day moving average, as I said. But the new highs I'm expecting in the next couple of weeks are not going to overtake, I don't think, or barely overtake, I should say, the August highs, and I think they're going to stay below these June lows. So I don't see this massive strength. And also, I'm not going to pull it up, but Microsoft has been having a hard time closing under its 200-day moving average, and that's not really what you want to see. So we'll see. And I think it's a company we've all heard of, Microsoft. Sexy name for a company, Microsoft. Weird. Okay, I wasn't drinking before this show, I promise. Fridays, yes. Yes, I was. All right, so next one, this was the SMH. Oil up 5%. Again, it had a bad day today. It was down 4.3%. All that being said, though, it is still up 5% because obviously coming from such bad levels down here. So we're going back 5 days, going back to about the third close. So nice here. A similar chart, obviously, to XLE in terms of what the relationship is to the 200-day moving average. We all kind of had a consensus. Don't forget, this isn't barrels of oil specifically, U.S. crude. This is the USO, the ETF price, so $76. We had agreed here, essentially for the last, at least going back to May, so the entire summer, when a lot of people drive, or so I hear, and fly, that this was worth about 74.5. And now we went above that all the way on the scare. And this is as much as it could muster with $79, which ironically is the absolute high it had in August. And takes you back to July. So kind of a different era. Let me pull this up. Hang on. My computer is just Bumping. Okay. So a nice surge. It was impressive to see this a bit. Again, the counter started right there, day one, and then it's starting to give up the ghost very quickly. Ugly bar. I expect it to go lower tomorrow. We'll see. Of course, the Hurricane's supposed to make a touchdown tomorrow as well in Florida. So we'll see how obviously Emrg is going to move on that. So be careful out there if anyone's in the in Florida again. That's really scary. Praying for you guys. Oil. So this USO chart, it may, I don't know, they may put it to high end around 77. I think that was pretty much it. I have 77 for a ceiling on USO, and then where its living area is hovering back towards 73. I think this 77 is like the top floor in the house, and then the $75 is kind of where maybe your bedroom or the living room rather is. So really where I see it living, hanging out, I guess playing its PS5 or whatever it is doing, it's oil. I don't think it's doing that. So $73 is where I see this descending to over the next 2 weeks. Really lousy examples. I guess it was good for the house example first. And then XLK, of course, when you have semis up big, you're going to have the broader tech community up big. So tech up 3.5% in the past week, up almost 2% today. Again, so basically what I was saying before, tech had its high days on 7-Eleven when I was getting my Slurpee, not giving Slurpee. I was getting my Slurpee. So I'm not going to do the accent. There's not even any comments. I'm just psychotic. So rising 200-day moving average. So again, so I'm expecting this to descend over the next week. Want to pick my spots. Don't think it's absolutely going to surge here. I still think this has an area. It stays around or drops to about 222 at any point in the next week. I think that's where it stays. And then the next rally will take it just to about 230. So basically exactly what I said. And it's going to stay inside of its 52-week highs. I'm not sure the tech trade has the momentum to go above that again. S&P 500 is differently constructed. It's not just that. We'll see again the same chart for the Qs as we looked earlier. So always that's what they're talking about, that different exposure to different indices, small caps through the makeups of energy and financials versus tech, which is heavy on semiconductors and different kinds of software, and then your S&P 500, which you have JP Morgan, you have other utilities which are hitting not today but have been performing well, etc. So diversification. All right. Next. So that's okay. So the top three losers of the past 5 days. Oh, I want to put this one because I was right and I was still wrong, and I think you guys will appreciate that. I was right and I was still wrong. What the hell is this? See, so this is the thing. It's in trading, it doesn't help to be early. Okay, so I'm going to be a little bit vulnerable here. So there were signals here. I said, this is a clear signal. My son just turned 3 2 months ago. If I told him the candles get to the black line and then you could put in the money and start to sell it, he might get a job at Citadel. I don't think he'd say Citadel, but he'd probably get it's very, very high performance. And yet I couldn't quite do it this past week. I had mentioned it on the video last week. I said, if you get that tag of 1675 last week, it's kind of like common sense. You were going to get that pull down to about, I'll literally look at what I have on my sheet. I said, it's probably going to 1530. Holy shiza. Look what happened. So very quickly too. So October 3rd, you were at that print, literally high 1680 above the 200 moving average. You get that candle, red close, and it's been descending ever since. And obviously this is affected from Helene and Milton as well. So now what? I think the trend is your friend. I still think this goes lower. I don't think it absolutely drops from here. I still think it hovers around 1540, and I still think next stop 1365. I always like to see where things live. I don't think that has the momentum to take it down to the new 52-week lows. So I don't think that's the shore that it once was. So I'm going to have to revisit that as well. My options expire next Friday, albeit at this point, crapola pretty much worthless. So thankfully, I sold some puts on the other side in terms of the spread. But yeah, so not too good. The downside was here and it's bottomed in August. As I said, I don't expect the new, the lows on this next fall to take us out. So similar to the Qs in terms of momentum, not taking it through. There's another better short out there. So nat gas, not a great day today, but just beautiful, perfectly technically speaking, 200-day moving average steps in, says, no way, Jose, it's a piece of crap. This is your true colors. Kind of like the Jets. No offense, but you fire a guy after 5 weeks, but crazy. Wild. Just wild. Okay. So All right, next. So this is very similar. KWEB, the second biggest loser in the past 5 days. This one's coming off hard, down 10% today, obviously with the China fall off. So look at the candle here. So yeah, it's down 4. We're talking about it here because it's down 4% in the past 5 days. Pretty remarkable because it's down 10% today. Kind of made my mind scratch. Yeah, so similar. I'm going to give you the same levels, but I'm going to do this for KWEB. I see it going to 33, and then ultimately, if it gets a lot weaker, 32. But I think this goes to 33 in the next. Now that it's begun, I want to see how the futures are trading, and Shanghai tonight and tomorrow. But I still think this goes to $33, which is a big reduction. It's still another $2. So just be careful if you're trading this one. This is crazy, picking up volatility. Who knows what news comes out overnight. But yeah, this looks obviously like it's begun mean reverting towards the downside. And just to put some numbers in it, the 21-day exponential moving average is 31.5, which is another 350 away last I checked. So that's a 10% decline equal to today. So, it's going to be like circuit breaker feeling type stuff in that country. So you're going to see PDD, Baidu, JD, all those companies down like 15, 18% like they were today. So it's begun there. And then GDX, the last one in terms of big losers of the past 5 days. This group has fell out of love. I do want to know, I have right here on my sheet, by GDX October 11th. So by the end of the week, I have a note. This has been a group I've wanted to get into. Looks really good. Hopefully it's not overdone when I get in. It's not too late. But I think this is going to base. I still think this isn't, today was flat, down 10 bips. I still think this potentially has a little bit of downside towards 37. It could be a volatile group at times. You might get some volatility expansion. So not expecting, like I said, I'm getting myself to the end of the week. And then I do expect a mean reverting move towards 39.5. And then my ultimate target when I'm going to purchase these options is 42. So bullish on GDX. I do think you want to get long that group. Be careful. It is still volatile. Flat day today. Look for it to create a base, like I said, around 37. And buy anywhere, under 39, and I think you're good. That's going to be my strat. Okay, and then what else we got? Boopity boopity bop. Okay, so top 3 absolute trades of the past 5 days. If you were short nat gas at a better level than me, you're crushing it because that's the best trade of the week, down 6.5% in the past week. So congrats. Long semiconductors, I am. Rocco. Not giving me any love. Semiconductors up 5.5%, and then long oil up 5%, but reversing today. All right. I think, what did we miss? Do we have any tickers in the chat? No. All right. I will. Are you Indian? I am not. And that was the joke. I am Egyptian. Any other questions? Beautiful. All right. I will talk to you later. Thank you so much for watching. Peace.